Hello for everyone, I'm Yvonne and I teach Year 13 Accounting at Samoa College. Today I'm going to be sharing teaching strategies on how to teach balance day adjustments. This is from Year 13, Strand 2, Processing, Substrand 3. First, I'd like you to think about the challenges you face when teaching balance day adjustments. These are my challenges. I find that students can't differentiate between accruals and prepayments. They can't identify the type of balance day adjustments, so therefore, they do not post balance day adjustment correctly to the General Journal. How to address these challenges? Well, students should have a clear understanding of why balance day adjustments are carried out. Let's take, for example, revenue and expenses prepaid this year should be pushed forward to next year, and revenues and expenses accrued at the end of 2020 should be recorded at the end of the year. So this allows an accurate profit to be calculated for the year. So from having this diagram, students can clearly see the difference between prepayments and accruals. The second strategy is for students to decide the right type of balance day adjustment. Take, for example, if they're given a balance day adjustment, they have to ask, is it an accrual? If the answer is yes, then they ask again, is it a revenue? If the answer is yes, then it must be an accrued revenue. Otherwise, if it's a no, then it must be an accrued expense. However, if it's not an accrual, then it must be a prepayment. Then the student will have to ask again, is it an expense? If the answer is yes, then it must be a prepayment. Otherwise, if it's a no, then it must be an unearned revenue. So you see, asking these questions is very useful for students to identify the type of balance day adjustments, such as accrued revenue, accrued expense, prepaid expense, and unearned revenue. So once they discover this, the next step is that they have to know the type of account for each balance day adjustment. Our first balance day adjustment is prepaid expenses. These are expenses paid but not yet incurred. Or in other words, they're amounts owing to the business. Therefore, they are assets. So when students understand this, that they are assets, they automatically debit the prepaid expense and credit the expense account concerned. Common examples of this balance day adjustment: prepaid insurance or prepaid rent. Our second balance day adjustment is unearned revenue, or otherwise known as revenue in advance. These are revenues received but not yet been earned, or amounts owed by the business. Therefore, they are liabilities. So if students understand that they're liabilities, they'll certainly credit the unearned revenue and debit the revenue concerned. And common examples of here is rent revenue received in advance. Our third balance day adjustment, we have accrued revenues. These are revenues which have been earned but not yet been received, or you can say amounts owing to the business. Therefore, students will determine they are assets, so they have to debit the accrued revenue and credit the revenue account. And examples for this one are accrued interest or accrued dividends. Our fourth balance day adjustment is accrued expenses. These are expenses incurred but not yet paid, or you can say they are amounts owed by the business. Therefore, they are liabilities. So students have to credit the accrued expense and debit the expense involved. And an example of this balance day adjustment is accrued wages. At this point, students should realize by now the effect of balance day adjustments, which is number one, matching the revenues and expenses accurately calculates profit or determines profit. And number two, they bring into account assets and liabilities which have not been previously recorded. Like in the previous demonstration, we saw the creation of two assets which were prepaid expenses and accrued revenue, and two liability accounts which accrued expenses and revenue in advance. Other balance day adjustments involve depreciation. It is important for students to memorize the formula for depreciation for each method. The common depreciation methods we have at year 13 is straight line method, where the original value of the fixed asset minus residual value and then divide by the useful life. The second method is diminishing value method, where the book value is multiplied by the rate. Here, common mistakes students find, they take the cost of the asset multiplied by the rate. So it is important that we stress that cost minus the accumulated depreciation, then you find the book value. Once students calculate depreciation, they have to know that the general entry for this balance adjustment is to debit depreciation and credit accumulated depreciation. Another important thing to remember here, students have to know the difference between straight line method and diminishing value. For straight line, it's same amount of depreciation every year, whereas diminishing value, it's a reducing value every year. And some students find it hard to find the depreciation value, so it's good to use a depreciation schedule for them to arrive at the right amount of depreciation. Other common mistakes here is the partial depreciation. For example, when the asset has been used for only 3 months and the student applies the full year depreciation. But what they should do is take the depreciation amount, divide it by 12 months of the year and multiply it by 3 to arrive at the right depreciation amount. Okay, and our final balance adjustment is when accounts receivable are adjusted, when accounts like bad debts and doubtful debts are considered. So it's important for students to know that bad debts is when accounts receivable fail to pay their debts. That means the account receivable is written off and is expense. So they have to debit balance bad debts and credit accounts receivable. Whereas for provision for doubtful debts, it's an estimation of present accounts receivable who are unlikely to pay their debts in the next accounting period. Here, normally they're given 8% of the accounts receivable that is doubtful. And then, for example, 5%, they take 5% of the account receivable to arrive at the doubtful debts amount. And when they have that, they have to debit doubtful debts and credit provision for doubtful debts. It's important for students to know the difference between this, because bad debts, the accounts receivable is directly affected, whereas the doubtful debts, a provision account is created. Right, to sum up my strategies to overcome challenges in teaching balance sheet adjustment. First, students have to have a clear understanding of why balance sheet adjustments are carried out. Second, they have to decide the right type of balance sheet adjustment. And when they know the type of balance sheet adjustment, they have to know the type of account for each balance sheet adjustment, which is whether it's an asset or liability, and whether to debit it if it's an asset, credit it if it's a liability. And fourth, students have to calculate the right amount of depreciation. And fifth, they also have to know how to adjust the accounts receivable at the end of the year by taking into account bad debts and doubtful debts. These are my strategies in teaching balance sheet adjustment. I hope it was of any help to you. Thank you for watching. 做法说服。